So just as we're brushing off impeachment, there's still an issue looming that investors should worry about. And this is not your typical economic issue, it is the coronavirus. Concern about the highly contagious coronavirus is taking a toll on global markets and companies. It has spread from the city of Wuhan to dozens of countries, including the United States of America. And according to the World Health Organization, is now a global health emergency.
As of this morning, the death toll in China has hit 811, with the number of confirmed infections exceeding 37,000.
And many investors are running for the exits despite quick, swift action from the Chinese authorities. China has shut down Wuhan and the virus continues to spread rapidly. After the initial outbreak, the market was quite shaky. Just in one day, the S&P 500 dropped nearly 1.6%. And at one point, the market actually turned red for the year because of this virus. Now, it is still rather early, but it'll be important to watch the impact the virus will have, especially on the Chinese economy and markets. So in this video, I'm going to be going over the coronavirus, its effects that it might have on the market and the economy, and what investors should do and how it will affect investors. So for starters, what is this coronavirus? So this virus named 2019 nCoV likely actually came from bats.
It's freaking bats.
Now it is similar to the MERS virus or the SARS virus in that it comes between close contact with people via coughing or sneezing. Now according to the Centers for Disease Control, the CDC, the general risk for the American population is rather low. Now, one model built by Casen Securities forecasts that as many as 800,000 people could be infected by it and 200,000 people could actually die from it if those who are infected right now cannot be quarantined by September. And the CDC has confirmed a growing number of cases all around the US. And among investors, a sell first, ask questions later sentiment appears to be taking hold. And the news is also having an effect on mortgage rates, dropping them even lower. Some investors are even fleeing to safe haven investments such as US Treasury bonds. And if you haven't seen my video yet where I describe the best financial investments that you can make for 2020, be sure to hit that link down below. I'll put that in the description. Even gold has rallied modestly over these last couple of weeks. Now there are things that investors can do to avoid the short-term noise and keep their portfolios protected. But first, what has been the coronavirus's impact on the stock market? The US's stock market drastically tumbled following the news, but China's market and economy are still trying to bear the brunt. Now, US stocks did rebound as a reaction to good corporate earnings. That's good news. Shares are in positive territory now, but the impact on the US still could grow. But as we're speaking right now, the market is at another record high. Now, investors don't like volatility, but they have had to deal with disease-related shocks in the past. History says that the impact will be temporary as long as the outbreak is contained. While the White House is considering banning all US-China flights, United Airlines and American Airlines have already suspended some flights to mainland China, while British Airways has said it is canceling all flights to the mainland. Traveling and gambling stocks are being affected because people are canceling flights and vacations in the fear of being exposed. And the usual flood of Chinese travelers to the gambling hub of Macau has only become a trickle. Now, as far as the coronavirus and the possibility of a vaccine, it will also affect biotech stocks. So some shares of small and mid-sized biotech companies that are working on vaccines have soared on this news. But analysts do say that it's unlikely that a vaccine will become available and developed to the public market in time for revenue yield for this current outbreak. And the coronavirus is also affecting oil prices. Oil prices actually just fell to a 3-month low, and US benchmark crude has suffered a 12% loss in the month of January. The coronavirus is intensifying seasonal weakness in the market, which in turn raises prospects for lower fuel prices. So tourism and consumer-related sectors have already taken a hit and could actually continue to fall if the outbreak isn't contained. So stocks that offer discretionary services to the affected region typically do fall first in this kind of a pandemic. This is because consumers have the option not to go there or buy goods or services that might be affected by the outbreak. And as far as some big giant name brands, Apple dropped 3.2% upon the news, while Disney dropped 8.3%. But for now, good news for US investors, Chinese stocks and markets are being most affected. And for the most part, luxury brands such as Burberry, Gucci, or Cartier are also being most affected, followed by hotel chains in China. This is because of late bookings and high cancellation rates among these big global chains of hotels in the region. So these large-scale global operating hotel brands are seeing much higher rates in late bookings and cancellations. But it's also having an effect on bars, cafes, and restaurants as well. Starbucks coffee stores are seeing a noticeable drawdown as they're down 20% from a year ago in the same week. And especially because the manufacturing sector is remaining weak, if Chinese consumers continue to stay at home as opposed to traveling, consuming, and spending, it could have effect on the global economy. But as always, investors should stay focused on the long term. While a panic rarely benefits a company's stock, it could benefit investors who stay cool and stay focused on the long-term picture. So for newbie investors, stocks that have plummeted on this news could make a good purchase. But upon the SARS and MERS viruses, even the worst affected stocks didn't see much of an impact 1 year out. And also keep in mind that this situation may not be as bad as prior breakouts that we've seen in the past. Chinese authorities have been proactive ahead of the spread of the virus, and global actions have been very swift as well. So if you're looking for opportunity, hotels, casinos, and airlines may be a good purchase right now, as they see a short-term effect but won't bear much of a long-term impact. But unfortunately, many retail investors tend to overreact when it comes to events like the coronavirus. Even the hardest hit sectors offer the most potential to bounce back. Retail investors generally do end up losing as they make portfolio adjustments to the crisis of the day. And we've seen this with the debt ceiling crisis, Brexit, the Greek debt crisis, and even the standoff with Iran most recently. So as far as protecting your portfolio, what else can investors do? So the short answer to that question is probably nothing. If you buy stocks regularly and on a continuous basis, you'll be perfectly fine if you just continue to weather this panic. And if you're planning on moving your money and shifting it towards a high yield savings account or CD accounts, go ahead and stick to that plan. The furor over this coronavirus may end as quickly as it began, although that remains to be seen. But if you are feeling compelled to do something, feel free to look for stocks that have been so beaten down and look for bargain prices as they arise. If your investment discipline does include international air shipment companies, casinos, and airlines, be sure to keep your shopping list out, as more attractive entry prices will continue to appear. Investors will then hopefully begin to regain their composure and start to bid again on these highly affected companies. Now, that doesn't mean by any means that these stocks will rebound in short order. And investors might even become even more nervous as they start to sell off stocks that have nothing to do with China, and that could create even more opportunity as well. But investors do well when they stop focusing on this day-to-day volatility and simply focus on the long term for their investments. Over time, investors win by owning well-managed businesses that offer services and products that consumers love and need. So while there may be a short-term blip in the market, it's always better to practice to stay calm and maybe even buy a little more stock as these prices continue to become cheaper. So I'm curious to know what you'll be doing in regards to this outbreak. Will you be selling some of your investments? Will you be scooping up more? Will you be shifting your money? I want to hear what you're doing. Tell me down in the comments below. 2020 may look like it's off to a rocky start with so many events happening, but always remember to stay focused and stay cool. And if you enjoyed that video, if you got value out of it, be sure to give it a big thumbs up, smash that like button. And if you'd like to see more videos from my channel, I post videos every single week covering business, finance, entrepreneurship, mindset, strategies, and tips and tricks. Be sure that you subscribe to my channel. I post videos every single week. And if you'd like to be notified so that way you're first in line to see that video before anyone else, be sure that you hit that little notification bell as well so that you're notified every time I upload a new one. See you in the next video.